And now we move forward for the second panel. We are going to welcome to the stage Michael Kozik, founding partner from Loyal VC, Marcus Daniels from Highlight Beta, Rui Falcão from Core Angels, Ebba Tedding from 4+ Venture, and Andreas Mihailovic from Global Super Angels. And the moderator is going to be Marcus. Panel about liquidity and private markets. Welcome.
Thanks.
All right. I'm super excited to moderate this panel specifically in 2025. As we know, liquidity in private markets is a hot topic for LPs, but I would actually put out it's also a strategic opportunity for all investors. So really excited to look at this from a strategic frontier perspective, maybe get a little bit geeky, getting into some of the models of evergreen funds, tokenization, but really make it accessible to all the VNTR investors here as we all look at this new frontier of how we deliver returns for our LP bases and also build and fund the future. So in the next 30 minutes, I'm going to really focus on 3 themes. One, really what the current state is, so get the perspectives from our panelists on what are they seeing currently, but also then, number 2, get into a bit of a discussion with respect to the future, about innovation, new sort of liquidity models, structures, considerations, really across different asset classes, but also stages. And then lastly, I think everybody wants to know what's going to happen in 2026. So that's what we're going to get into, just some hot takes at the end, and looking forward to having this discussion. So, we are really fortunate today because we have 4 amazing panelists who have diverse perspectives, experiences. Not only do they have big brains, but they've also delivered returns. And so I'm looking forward to learning from them as well, and we can go through some quick intros. I'll just start to give a bit more perspective of who I am. So Marcus Daniels, founding partner, CEO, and CIO at Highlight Beta, pre-seed VC, and corporate venture studio platform. I've done 81 pre-seed investments, have 12 exits, also several secondaries to drive in returns over the last 12 years. Raised institutional capital from institutional LPs, so understand the considerations on that side as well, from RBC, BDC, family offices. I've also invested in 5 funds and also have operate 3 venture studios. Right now, I'm excited about building and funding the future of finance, blending TradFi with Ethereum. Maybe I'll pass it down. Everybody give a quick intro, your perspectives of who you are.
Should I start then? Okay, so I'm Ebba Tedding. I'm CEO of a venture studio, which also invests in different AI and Web3 ventures. And of course, the topic of DeFi and how you talk about liquidity is, of course, very, very exciting. So looking forward to this panel and hearing the rest of you talk too.
Hi, I'm Andreas Mihailovic. I'm a German angel investor based in Marbella, Spain. I have invested in more than 180 startups as of today, and also 15 VC funds. And in my previous life, I've been an entrepreneur, a CTO of a company, and have created a cash cow, which have enabled me to invest in these startups.
Hi there, Mike Kosick, Loyal VC, Canadian fund that invests pre-seed globally, worldwide. We're very early stage, very active. We do a new deal every 5 days. We've been doing that for over 8 years now. So we're up to 473 portfolio companies in 72 countries.
Hello, I'm Rui Falcão. I'm CEO of Core Angels. It's one of the leading angel networks in Europe. We are more than 350 angels, and are spread a little worldwide from Brazil to Europe, mainly in Europe, but also looking into Africa and the United States.
Great. Well, maybe let's start with you. Just 2025. What are you seeing in the current market with LPs demanding more liquidity and the trade-offs between that and your model?
Okay, so. Thank you for the question, and I think it's very relevant for the angel side. I will speak more about the angel side. That's what our focus. This is being a huge problem for angel investing, for the industry of angel investing. It's still huge. We are worldwide, we are more than 1 million persons, and we invest, for example, in Europe, per year around 5 billion euros per year in early stage. So the thing is that we are in the beginning of the chain, and many times you need to wait 10, 15 years for exits, and there is not a tradition, a culture that the angels per se do the exits. Normally they delegated the exit of their startups later on VCs. So we need to develop strategies to exit, and what we are doing now, we have 4 strategies. So one is more being in the side of the angel fund, not particularly the syndicates, but the angel funds are much more stable. So you can invest in portfolios, and because of that portfolios, you have more chances to do it. Another aspect is that you need to begin strategies to make partnerships with VCs. So you begin, and not because it's opportunistic, but because it's strategic. You say, okay, we invest in the early days, but we show you the best startups, and then you buy at least part of our shares. So it's another one is the internally. So because you have the structure of angel funds, people can buy the shares of others. And we are developing 2 more strategies. The one with entrepreneurs. So we give the entrepreneur the right to negotiate a part of our shares to the next round, if we can find certain numbers. And I think the biggest opportunity for now is in Europe, at least. I think it's to have a secondaries fund for exits, particularly for exits. This is a problem all over the world, but particularly in Europe, there is not a tradition of doing this. So if we create a secondary fund for angels, I'm sure that we will have the possibilities to invest in the best startups that in very early stage allow our valuations, and that will be very important for the industry, for recapitalization of the angel industry.
Thanks for sharing that. Michael, do you want to continue?
Yeah, sure. Just want to echo one point earlier on it. Yeah, it does take quite a long time to get your money out of an angel investment. Both my partner in the fund and I were active angel investors. It took him 14 years to get money out of his best investment. It took me 12. And we're, as entrepreneurs, I like to joke, 12 years is 3 eternities, not just 1 as an entrepreneur. Our tagline is doing venture differently, but the big structural innovation we had is we started an open-ended fund 8 years ago where you can get your money out earlier on. Happy to talk about that later on.
So for me, as a single angel investor, it's also quite a challenge with this liquidity. So I try to invest a little bit later to have not pre-seed stage, but late seed stage. That gives me the chance to get some money back in the next maybe 5 years. But in reality, I would admit that it takes still 10 to 15 years, also for me. But then the other thing is to have a lot of startups. So the probability to get some cash out is higher. If you only have 10, you have to wait 15, 20 years. But with 200, probably the chance is there that you will get some exits in the next few years. And particularly in my case, I would admit that the last 2 years have been quite tough. That's why I have been mainly focusing on supporting my portfolio startups in the last 2 years. Luckily, I have my cash cow still, so I get regular dividends. But most of those dividends went into the portfolio startups in the last 2 years. But now I see some good chances to see more and more exits in the next few months. So it looks like the situation is getting better now.
Ebba?
Okay, so I think if you talk like 8 to 15 years, we're talking microseconds of finality and exits. That's what this new generation of tokenization and fractionalization and building things are actually using these new rails or infrastructure. So I think if I would say what's happening right now, which was your question, I think this is what's happening. We have discovered that we have these new rails. We can talk about the blockchain. And the new rails, they enable these packaging, digital packaging, and like capturing it in a way that you couldn't really do as an angel investor, because then obviously there might be reasons you want to be long-term, of course, because you want to be part of the team. I know that as a venture builder, but also if you don't want it, you want it to be easy to get out, right? Or someone else might be interested. So I think this is a shift we're talking about today, right? And what we want to actually promote is that we have the toolings, we have the infrastructure, we have the security, and now we're getting the entrepreneurs who are actually building, using these tools, and going from 15 years to 15 microseconds.
I think that's fabulous, and I'm glad we had this whole kind of continuum of perspectives here. Everybody in this room who's an investor is dealing with this problem. We've heard here, the liquidity from before was 10, not a GPLP structures, 10 years with maybe 2 years of extensions. Any pre-seed investing, trying to invest later because you're not getting the liquidity elements, but also the fact that we're getting on this new age of how companies are going to be built and funded differently. I would love to maybe get anybody who likes to give maybe a quick take on perspectives, as was kind of brought up, that a lot of liquidity usually happens later. So if you are an angel investor in the room, and we get some strategies on partnerships but getting partial liquidity, what else are you seeing in 2025, or tips you have for the audience here and how to get liquidity if you're an angel or pre-seed not investing late? Anybody want to take that one?
Well, I think we need to change the culture in the mind of the angels in the beginning, because the angels were formatted to invest, not the invest, and there is a culture of the action of many of the angels. The main purpose of investment is not only because of money; they have other type of purpose. So money is important, but it's not in many cases the main thing. But the fun to select startups, to be connected, it's one of the parts. And normally they tend to forget the other parts. They delegate that in the VCs, and they are okay with that. But as soon as there is professionalization, we need, and they see that the returns are too long, they need to change this. And now it's changing. Now we see that we need to create. When we plan to invest, you also need to plan the investment. And you need to formulate your strategies to how you are going to see this happen. So this I think, the first that we need to act is, in fact, for now, in the mind of the people, to change the mindset of angel investors in order to have the angel experience. The fantastic of the angel's experience is also in the exit part. So when you exit, you really have a fantastic angel experience also. So it's not the way, the result is also important. So we need to work more on that, but beginning with the change of the mentality.
Well, look, when the numbers get big enough and you diversify across vintage, then you can start to get what looks like a venture annuity with money coming out. But VC is legalized insider trading, so a warning for any quick sales or secondary sales is there's a big information asymmetry issue and problem. So. Happy to talk more about that, but that's an interesting thing that I want to throw in here for the years to seconds conversation.
No, I think that's a fantastic perspective. I'll throw it to the group maybe on that topic, just to keep it flowing here. There is a bit of a hot take that illiquidity is actually a feature and not a bug, right? And I would love the perspectives maybe of just how you're thinking about the premium of illiquidity in your perspective as well. So anybody would like to take that?
Well, I mean, as a venture builder, obviously, we're quite illiquid in one way because we're part of actually building a venture. So we want to be all in. We want to be stuck in a way to actually, evolve it together with a venture. But I don't think it's a either or. I think it's a combination, right? And I think just to come back to the 50 microseconds thing, I think what's happening now is that we have technology that can actually, it's like, let's take an example, NFTs. I think most of the people in here know what an NFT is. It's like a captured value in something that is a token. I think the first token is just one picture. Like take the Bored Apes, which was a famous, that's one picture of one ape. And we all were really, stunned that happened. What I think is going to happen now is that this is like when the films came. First you had picture 1, 2, 3 pictures, and then it moved because you sort of looked at them together. This is what's going to happen now. We're going to stream things. So ownership and building these ventures is going to be like streaming ownership. I think we have to prepare that it's not just going to be, now I go in and invest here, I do either long-term angel or I go in series. I think it's going to be a mishmash and a plethora of different ways of doing it. And I think both is good. You both want to have long-term skin in the game and be part of what you're building, but you also want to invite others to come on for the right. Like you would change your CEO, for instance. At some point in the business, you need one kind of investor. Then you want to get that investor out maybe because you need something else. I think that's what we're trying to do, at least.
Yeah, so let's segue a bit into the new structures of innovation. So also the question out, if now in 2025, you're going to redesign how you invest, what new innovations would you add to either your fund or your investment strategy? Thinking about, is it, liquidity pools of capital, evergreen structures, tokenization, anything else?
So I'm also heavily invested in some companies around the security token sector, so like Securitize and so on. So I would hopefully they will come up in the next year or next 2 years, hopefully, with some solutions to be able to trade some of my shares with others, because I'm also a long-term thinking guy still, so I want to stay in long-term, the next 20 years, no problem, but I want also to sell something every now and then, some partial exits, that would be nice to have, and that's why you need that technology, to have to tokenize those shares and be able to easily sell them to somebody.
And you need the blend ultimately to drive the alpha and the returns. You can't just have, it's the same reason why private credit has had its moment and to really drive returns in a diversified portfolio. But yeah, any more other perspectives on the innovation side of how you would invest differently?
Well, we actually, when we were in fund formation about 9 years ago, we said, hey, maybe we should tokenize this fund, right? But we had enough differences in what we were doing and how we were doing, saying, it's not something we're going to start off doing now. But it's really interesting as an opportunity. I think about founders taking some of their money off of the table. So if their options in themselves were tokenized, same thing with some of our investments. We have some portfolio companies, I like to say, they're better at fundraising than they are at building the business. Now, it doesn't mean they're bad at building the business. Their superpower is herding cats, baking the cookies at the right time during the open house. So if you have a different view, and this is a little financially nerdy about that kind of actually return on capital, then maybe you want to pull some of that out and redeploy it in other places. So I think that the tokenizing aspects of this are really, really interesting. But I think that, again, the information asymmetries are going to, a lot of people are going to get hurt.
I think the fact that we have tools that can make things agile, it will be a tremendous step. So the fact that we have the possibility in microseconds to make transactions, not only and also legally, this can be registered, and you can be confident on that this is very important. But I think we need to be innovative not only in the tokenization, the technological part. I think the step on top of the change of mentality is we need to be innovative in the processes, to create innovative process, like those that we are doing with the entrepreneurs, giving the entrepreneurs the possibility to share our shares and giving the right to them. They say, wow, you give us the right to share your shares. What does it mean? But yeah, if you sell it with a reasonable return, we can agree on that. In the next round, you can deal with that. And also the protocol. In the last panel, we have heard Stefan that there is not enough interconnection between angels and the family office and venture capital. So let's protocol ways of coming them. Come to our process, very early stage process, to understand what we are doing, to having a look, what do you want in the future, what can we offer now, and begin to protocol that we go to a certain part and you take them from over. And this is not only the technological part, but also processes that we can create and relationships and trust between different actors of the same ecosystem to make the ecosystem better.
Yeah, we can't really talk about, the innovation in liquidity models without talking about AI, without talking about, Web3 tokenization, AI with real-time pricing, tokenization. Are we even going to be talking about exits, in the future? What does that really mean if you're doing things in milliseconds as an optionality? Would love to throw that to the group of perspectives of AI and tokenization with respect to these models in the future.
I think this year has been very interesting. It's been the year of when Web2, or the traditional finance and industry, is closing to Web3. And I went to this conference in Switzerland a few weeks ago. And what was really interesting to see, that was not just these crypto dudes with T-shirts moving around, it was also these finance bros. So, I mean, I'm normally the odd one out. I've been in this industry for a long time, and, middle-aged women from suburbia is not, the average conference goer. But anyways, so I think this is a trend. You mix the crypto bros with the finance bros now. You've got the worlds that are actually merging. And I think this year we have seen a lot of innovation and actually playing with the technology. And we've seen the DATs, the treasuries. We've seen other vehicles to actually enter traditional investors into something new by creating these vehicles that allow them to be part of something that is not smelling Bitcoin, so to speak, because I know that there's a little bit of resistance. And I'm thinking that this is something that's going to have to happen, because there's a lot of opportunity in markets like the Nordics, where I come from, where it's not fully a blooming, innovating industry, because everyone's a little bit afraid of smelling like Silk Road or something. So I think if we can create those new companies, those ventures and those infrastructural companies, that will open up for a lot of cross-overlapping traditional way of doing it and the new way of doing it. And that will probably happen quite soon, because it's already happening now. We see a lot of them. So I'm super excited about that, to see what's going to happen. And also, it's fun, right? Because it's not so much a technical issue or regulatory, it's like fantasy.
New frontier.
How can we figure this out, and what can we build? That's going to be the next,
I think there's a lot of technology coming now. It's very exciting, but it's also about to say supply and demand is also a problem. There are some platforms out there who are selling secondaries and so on, but usually there's not too much demand, so there's not a lot going on there. So that's, I think, a challenge to build a really big brand, or maybe one of the big guys would integrate that, hopefully like Revolut or so, who have a lot of a huge user base and can motivate people to invest in this kind of assets. So that's something I think it's also interesting. And or we have these clubs like VNTR with the secondaries marketplace that also is, because it's a niche, you have thousands of people who are in the right target group who would be interested to take a look and invest. So that's something which is also very exciting to see.
So, I mean, I love the idea of, good capital getting to some of our good founders through these, agentic and algorithmic investing. So just anything that gets, attention and capital to the right companies in our portfolio is great. But also on the rise of the agentic investing, investors are herd creatures, so there will be flaws and pieces of those investing models which are going to overlook underappreciated opportunities, and that's exciting from a early investor perspective as well, to get into some of those companies before they are readily discovered in later stage by AI.
Yuri, just quick time check. What am I looking at here? Because I can keep on going for the next hour, but how much time we got? All right, so I'm looking to stop. I'll segue to the last section. Your rapid fire, 2030. Can private market liquidity in 2030? Fill in the blank.
Okay, can I start then? I think if you have the agentic economy, you have someone working on your behalf, and they have wallets. They're going to figure out where you're going to be and what you're going to invest in. And I think that's both scary, but it's also an opportunity. I think that's what's going to happen.
Yeah, I'm also dreaming of an app where I would have all my assets, and with one click, I can just sell and buy parts of that, even other assets like real estate, everything digitalized, tokenized. That would be my dream, hopefully in 2030, but let's see.
I like that dream, but I don't know if I want to be pressing the button, actually. I think it'd be too tempting often to have that level of liquidity. I think it's definitely gonna be there, and like I said, flowing to the best opportunity, that's great, but I think that we're gonna make a lot of mistakes in the trade-offs between that instant gratification and what you can get by playing the long game.
I think also, imagine that, in fact, we have much more liquidity in the market for angel stage, for pre-seed. I think we should look into the vision that how that could be good for the ecosystems, how that could be, it's important for the initiative of people to become more people entrepreneurs, to attract more people to entrepreneurship. Also to attract more people to investing, because if they have possibilities to have more liquidity earlier, we can invest much more in innovation, we can create other type of jobs in our society. So liquidity should become something that we all should fight for, creating the tools, the instruments, the processes, the networking possibilities to make that happen, because for the society, this will be very good.
I think we're out of time here, but how's the best way to continue the conversation after today to connect with all of you?
Yeah. Well, I mean, we're here, right? Connect
We're here all
through
the afternoon?
platform, yeah.
So connect with me on LinkedIn, mention VNTR, hopefully to have other conversations, and let's continue the conversation in the hallway. All right.
Thanks, everyone.
Thank you.
Thank you all.